Hello and very good afternoon to all of you. So in the today's session we will be understanding the most important topic for the UPSC and particularly for the other exam is GST. So I got few email that I should cover GST in the detail. So here I am covering the GST. So from now onwards my lecture structure will be like that what we will be going to read in the today's lecture. What is tax? First we will be understanding the tax system. What is tax? Why tax is needed and what are the measures through which the tax is being collected by the government, particularly state government as well as the central government. We will be understanding the types of the taxes, what are the types, for example, direct tax, indirect tax and types of the indirect tax we will be analyzing. Further we will be understanding the GST because GST is under the indirect tax system. It is actually the indirect tax system. We will be understanding the types of the indirect taxes. Then we will be understanding the GST timeline. It is not like that GST came as an event. Rather, GST was a process which was started back then in 2000s. So now here we are with the GST. What about the other countries? I mean, what are the tax structure in the other countries, particularly France, particularly Australia, which are the huge countries, and how they are following the tax structure. We will be understanding the advantages. What are the advantages of the GST after this implementation? What are the things we got up? We will be understanding the current challenges. What are the current challenges in the tax system, particularly in the GST? We will be also understanding how we can remove these bottlenecks, how we can remove these challenges. So now let's understand first thing first, what is tax? What is tax? Now what is tax? Tax is nothing but any charge or fees collected by an authorized government. Every single word is important. This charge fee is nothing but the money or the monetary. Authorized government. So what is authorized government? Authorized government is nothing but any constitutional government, we can say, or any other government which is being governed by any kind of the act or any kind of the law. Authorized government. Now let's understand about it, that why the tax need. Now if I want to go into the bit detail of this tax system, so why government want to collect the tax? Simple. Why government want to collect the tax? So government wants to collect the tax because government has to function properly, government has to give infrastructure, government has to govern the people. In all these things, government need money to spend. And from where money comes? Money comes from the people. And money comes from the people in the form of the tax, in the form of the fee, in the form of the charge. So why we need? Basically, the authorized government need money for welfare, for governance. This is why tax needed. Let's talk about the types. What are the types of the taxes? Now generally we categorize them based on the incidence and impact. Oh wait, what is this incidence and the impact? Let's understand about it. types. What are the types of the taxes? So basically there are the two types of the taxes. There are two types of the taxes. The tax one is direct tax, and second is indirect tax. So basically direct tax and indirect tax, how we can categorize them? Basically based on the incidence and impact. What is incidence? Incidence on whose, on or who, based on the incidence basically who is paying. Impact, who is taking that burden. For example, direct tax. Direct tax, incidence and impact both are on the same person. Incidence and impact both are on the same person. Both are on same person. Okay, wait. What is this? How? Example. Let's understand through example. Income tax. Who is paying? You is paying. I mean your father, your mother, your brother is paying. Incidence. And who is having that burden? You. Because your salary, ultimately your income is deducted. Let's say you are in that type of the income tax slab which government is protecting. Let's say you have to give 5% income tax. Let's say your income is 5 lakh. So up to 3 lakh income is exempted. After the 2 lakh you have to give 5% of your income to the government. So it means almost 10,000 rupees of the income tax you have to pay to the government. So who is paying? I am paying. Incidence on me. Impact, my money is deducted. Who is impacting? Me. So both incidence and impact are on the same person. This is the income tax. Let's talk about the indirect tax. Incidence and impact are not on the same person. Incidences and impacts are not on the same person. Incidence, impact are not on same person. So what is this incidence? Let's say value added tax. Let's say value added tax. Who has paid? Who has paid? A trader has paid. Who got impacted? You impacted. Wait, this is the bottle. You have bought this bottle for the rupees 10. Let's say the actual price of the bottle is 9, but 1 rupees is the value added tax which is being paid to the government. Who had paid? This trader has paid. And who has given that money? You. Impact is on you. Incidence on the trader. That's what both are not on the same person. Both are on the different person. So this is basically the types of the taxes based on the incidence and impact. I hope you are understanding, all of you. If you have not, then please do let me know in our comment section. No issues. Now let's talk about this. So now as we know that GST is a type of the indirect tax, or GST is a indirect tax. So now let's understand the types of indirect tax. So basically there are the two types of the indirect tax. One is ad valorem tax. Next is specific tax per unit tax. Specific tax per unit. What is this ad valorem? Basically based on the value. Based on value. Specific tax per unit. Based on per unit. based on per unit. Based on per unit. Okay, wait, what is this? Let's say my bottle is of the rupees, let's say rupees 10. Rupees 10. So government has said that 50 rupees bottle has to tax this much. So let's say 10 rupees bottle has to tax 5%. Has to tax 5%. Or let's say it has also been given. Now what is specific tax per unit? Let's say one bottle is being priced one bottle, the tax on the one bottle is, let's say, 10%. Now this bottle may be a steel bottle, this bottle may be the different bottle. So here administrative cost is very high, because let's say someone has said, okay, I have sold 3 bottles. So someone is showing that he has sold 3 bottles of plastic, but actually he has sold the bottle of steel. So bottle of steel is having the higher value, but the value of the plastic bottle is having less value. So actually, whenever you are selling the steel bottle, it has to tax much more because it has much more value. So here this thing can be categorized, but here it is difficult. It is very difficult. Now for example, let's say ice cream. Let's say example of ice cream. So let's say one scoop of ice cream is rupees 50, and government has said, okay, one scoop will be charged by 5% or tax or 10%. But here when I come to the ad valorem tax, it will said 10 gram ice cream will be charged by this much. 10 gram ice cream will be charged by this much. So this is the ad value, that let's say 50 rupees ice cream will be charged by this much, and per unit ice cream will be charged by this much. So this is the ad valorem tax. This is the specific tax per unit. Now let's talk about the GST. What is actually the GST? So GST is nothing but, let's understand the definition. GST is nothing but, it is a destination based indirect tax which has subsumed few indirect taxes, which has subsumed few indirect taxes. Now every word is important, whatever has written over the board. Every single word is important. Now what is the destination based tax? Destination based tax. So destination based tax is where is the consumption. Destination based tax means where is the consumption. So let's say one scoop of ice cream is being consumed here in Noida, so the tax has to be paid in the Noida. But let's say ice cream is made in the Bihar and came here in the UP, so the tax should be paid in the UP, not in the Bihar. That's what destination based tax. Indirect tax, so that it is a indirect tax, not a direct tax. So just recall, what is the indirect tax? incidence and impact are not on the same person, and which has subsumed few indirect taxes. Word few is important, not all indirect taxes are subsumed. For example, let's say excise duty on alcohol is not subsumed. For example, on petrol, excise duty on petrol, diesel is not subsumed. So these are the example of few where the indirect taxes are not subsumed under the GST. It means these commodities are out of the GST tax structure. GST tax structure. Now let's, if you have understood the definition, then it is well and good. If you have not, then please do let me know. Now let's move forward. Why we needed? So let's compare the earlier system before the GST era and after the GST era, then you will be totally understanding why we needed. Let's say trader A. Let's say A is a manufacturing company, A is a plant. Here A is a plant where let's say one chair is being manufactured. One chair is being manufactured, and let's say one chair cost is 1,000 rupees. So actual cost of the chair or actual cost of the raw material and all the services which is being taken during this manufacturing process cost me 1,000 rupees. So here the government has to levy the tax, excise, because you have made the chair, so you have to pay the excise duty. Let's say excise duty is 10%. So the cost at the outlet of the plant of this chair will be 1,100. So let's say this plant is located in Bihar. Let's say the plant is located in Bihar. This chair has come here in Noida. I am a trader. So what I found, okay, this chair is fine, but this chair is not having enough cushion for a comfortable sitting. What I did, I have add more cushion to it so that this chair becomes more comfortable. Okay, fine. So now whatever cushion I have added, that actual cost is 200. That actual cost is 200. So the total cost of the chair becomes 1,300. Total chair cost becomes 1,300. Fine. Here, because you have added the value to the product, here comes the value added tax levied by the state government. Value added tax levied by the state government. So let's say again, the value added tax is, let's say, 10%. We are understanding through an example. Please do not consider actually value added tax was 10%, because it is the different for the different states. It was actually, now it got subsumed under the GST. Let's say 10%. So 10% of 1,300 will become 130. So 130 plus 1,300. So it became 1,430. So now you came to my shop and you want to buy the chair. So I have added my profit, let's say 1,500, and I have given you this. Let's say I have given you this. or let's say just remove this profit now, for now. Okay, so you have paid actually 1430. So here, what is the issue? The issue is that the actual let's trifurcate this. What actually happened? 1000 rupees raw material, 200 rupees, 1000 rupees raw material, 200 rupees value addition, 200 rupees value addition, 100 rupees excise, 100 rupees excise, 130 rupees is actually value added tax, or VAT we can say, value added tax. But actually value added tax should be on 200, because on 1000 excise duty is actually levied. How much value addition took place here in the Noida or in the UP? Only 200. So it means only 20 rupees, not percentage, sorry, only 20 rupees should be the value added tax which should be paid to the government. But actually how much paid? 10 rupees more paid. Why 10 rupees more paid? Because we have also, or government have also taken 10% on this tax. 10% value added was added on this tax, which should not, because this is the tax, because this is the excise tax. So what is happening over here is 10 rupees is the tax on the tax. And because of this the product became costlier, 10 rupees more costlier. 10 rupees more costlier my product has become. So what is the disadvantage of that? What is the disadvantage? Now on one hand you may call it, wait sir, government will have more money, government can infuse into the infrastructure, we will have good infrastructure, and further we will become developed countries. No, wait, when product cost will decrease, our product will become competitive in the export market, so our demand of product will increase, production will increase, further government tax will increase. This is what not happening earlier or before the GST era. Now wait, look here. So what actually the GST has done? So GST has subsumed this excise plus VAT plus any other indirect tax which was levied during the process of manufacturing to the final consumption. That's why you see nowadays here you do not need to pay excise. Here what you need to pay is simple one rate which is known as GST. You pay GST on how much? You pay GST on 1000 plus 200. 1000 plus 200, how much rupees of actual cost of this chair is 1200. Let's say 10% GST. 10% GST becomes 120. So the product final cost will become 1300 plus 120, 1320. So it became less costly than this. So this is what, and this is why we need the GST. Or in the simple term, what I can say? What I can say? So in the simple term, what I can say? Simply I can say that because of the GST, the indirect tax structure got streamlined. Now it becomes easy for the traders to understand the tax structure, and also from the consumer perspective they have to pay less. From the export perspective, our product will becomes competitive in the export market. That's why we needed the GST. We will be understanding the advantages of the GST in the upcoming time. But for now, let's understand this. So this is why we needed the GST. Now let's talk about the timeline. What did happen and why the idea of GST becomes reality? Why and how the idea of GST became the reality? It is in 2004, Vijay Kelkar Task Force on the Fiscal Responsibility and Budget Management, actually FRBM, recommended the GST back then in 2004. In 2006, P. Chidambaram in his budget speech said that from 2010 we will be introducing the GST in the indirect tax structure. 2011, government introduces 150th amendment bill to implement GST, but it got lapse. It got lapse because in 2014 to 16 we introduces 122nd constitutional amendment bill in 2014, and it was passed as 101st constitutional amendment act back then in 2016. If you are preparing for a one day exam, then 2016 it becomes important. They generally ask that in which year GST act was, the act or the constitutional amendment act was made. So it was 2016. In 2016 constitutional amendment act came. So basically, if you know a little bit about the polity, so under the article 368, we can amend our constitution by the two processes. One is by the simple majority, second is by the special majority. One is by the special majority and second is with the special majority and half of the ratification of the states. Simple majority mein to, this is the different, actually it is not under the 368. And please do read all these constitutions, how Constitutional Amendment Act are made. So let's understand about the 101st Constitutional Amendment Act. 246A article, a state has given the power to tax goods and services. Now if you know, the services was not with state. Service tax was not with the state, service tax was with the center only. Service tax you had to pay the center, not to the state. But here in the GST, everyone, state as well as center, are getting the fruit of the GST. Now if we see 269A article, it talks about IGST on interstate trade, which will be distributed between union and the state as per the formula given by the GST Council. Formula given by the GST Council. Under article 270, it is the CGST. This central GST will be distributed between union and the state as per the formula by the Finance Commission. So for example, 15th Finance Commission has said, 15th Finance Commission has said that GST or basically the net proceeds of the taxes will be distributed with the state is 41%. So if 100 rupees is collected to the central government in the form of the net proceeds of the taxes, out of this 41% will go to the state. Total 41% will go to the state. Which state will get how much? It has also given the formula based on the income, based on the population, based on the the income distance, based on the area, based on the forest. So please do read the recommendation of the 15th Finance Commission, because I cannot tell all these things in the simple one lecture. 279A, President of India appoints the constitutional body which is known as GST Council. We will be understanding what is the GST Council, what it does. Now let's talk about the features of the GST. Now people basically confused, what is this CGST, what is this SGST, what is this IGST. So let's talk about this also. So basically GST. Under the GST, one is SGST, one is CGST, next is IGST. So what is this SGST? It is the state GST, center GST, it is interstate GST. Interstate GST. So for example, let's understand this tax. Let's say in Noida, one manufacturing unit has made one biscuit packet, and this biscuit packet is being consumed here in the Meerut. So GST is nothing but a consumption based tax or a destination based tax. So biscuit is being consumed here in the Meerut. Who from where has made? Noida. So here the SGST will come into the picture. Let's say on the biscuit, let's say 5% SGST is there. Let's say one biscuit packet cost is 100 rupees. So the SGST becomes 5 rupees. SGST becomes 5 rupees. Same goes to the center and same goes to the interstate GST. Let's talk about the interstate GST. So interstate GST, let's say again, let me make it understand to you by the example. Let's say here is the UP, here is the Bihar. So let's say again in the Noida, one biscuit packet is being manufactured and this one biscuit packet is being consumed here in the Bihar. So here neither SGST will come into the picture nor CGST will come into the picture. Here comes as IGST. Let's say IGST on the biscuit is 10%. 10% plus 10%, it becomes 20%. So here SGST plus CGST becomes IGST. So here neither SGST will come into the picture nor CGST will come into the picture, but actually IGST will come into the picture. So whenever IGST will come into the picture, it means the tax neither will go to any of the state, rather will go to the center, and here it will bifurcate the tax. Okay, this is mine because it is levied on the interstate tax, and Bihar will say, okay, some of the tax is mine because it is a consumption based tax. So 10% will go to the Bihar, 5% will go to the Bihar and 5% will go to the 5% will go to the Bihar and 5% will go to the center. 5 plus 5. So CGST will come into the picture generally in the UT and plus interstate trade. IGST. Fine. So this is what CGST, IGST and SGST meaning. I hope you are understanding. If you are not, then please do let me know. Now, let's talk about the features. Let's talk about the features. Features what? It is a destination based tax. Yes, we have already understand. It is a GST based tax. Dual GST, we have seen the CGST, IGST. Mutually inclusive GST rate. Mutually inclusive GST rate means there is a GST council. There is a GST council which will decide the GST rates. This product will be charged this much of the GST. This product will be charged this much of the GST. Okay, how you can say that? And how GST council decide? Basically, there is a HSN code. HSN code, Harmonized Service Nomenclature Code, HSN code, which is being developed by the World Custom Organization WCO in 1988. Based on this code, GST Council decides that what type of the product will be charged this much. Okay, you may ask, sir, wait, why do we need the HSN code? Basically, this is the Harmonized Service of Nomenclature Code. This is basically the worldly accepted. Generally all countries accept this HSN code for the easy trade of the products. So let's say, I will say the HSN code, actually it is a six numeric digit. So let's say 193052. This is one code of the biscuit. Let's say this is the code of the biscuit. So here in 193052, which is a HSN code of the biscuit, here it is also written what is the composition of the biscuit, whether it is a sweet biscuit, whether it is a coconut biscuit, whether it is a salt biscuit. So let's say this is the sweet biscuit. So 93053 will become sweet. So like that, salt, like that, it is a HSN code. Every product is being given this 6-digit numeric code so that all the countries should understand about the product trading. This is what HSN code means, and that is how it is also being helpful for the GST Council in harmonizing the GST tax structure. Multiple rates. What is this multiple rates we are talking about? What is this multiple rate? Actually, the multiple rates 5%, 12%, 18, and then 24. So basically, this is, let's say some products will be charged on 5%, some products and services will be charged on 12%, some luxury products and services will be charged on 24%. Let's say you have purchased a Mercedes Benz, so here it will come under the 24%. Let's say you have bought a egg, example. Let's say you have bought a bicycle, so bicycle will come here in the 12%. Let's say you have bought some kitchen utensil, it will come under 5%. So like that, here in the every tax slab there are the products which is being mentioned by the GST Council. Sometimes GST Council said, okay, this product will not become under the 12%, so move it to the 5% or move it to the 12%. This is happen based on the GST Council formula, what GST Council wants and how GST Council wants. Fine. So let's talk about the next. What is this GST Council? So actually the GST Council is headed by Finance Minister, plus other finance, plus is headed by finance minister plus members. And who are the members? Members are finance minister of states. So these will come, they will come, sit together, and they will decide which product will come under the which type of the tax slab. GST council. So let's say here is the finance minister, here is the GST council. Let's say the state finance minister of Delhi, finance minister of UP, here all these will come. So let's say this GST council has to decide that which product has to come into the which type of the tax slab. Which product has to come in which type of the tax slab. And let's say few finance minister is saying, okay, no, it should come under the 12%. Few are saying that no, it come under the 18%. Let's say there is a quarrel. Then how it will get decided? So here is the voting. All voting will take place, and the weightage of the voting is 1/3 goes to finance minister or central finance minister or union finance minister per se. Let's say union finance minister of union. His voting weightage is 1/3. I think it is 1/0. I have written 1/3. And state voting, state finance ministers voting weightage is 2/3. 2/3. So this is how they will be decided. The issue will be decided. Now let's talk about something about the GST input tax credit. So students generally do not understand what is this input tax credit. So let me say there is a trader A, B and U. Let's understand this input tax credit. So basically input tax credit means you will be given the money. You will be given the money whenever the tax will be paid by the other party or the furtherance party. So let's say this is A is a wholesaler, this B is a retailer, or let's say trader or retailer, we can say retailer, or let's say U is a consumer. So let's say there is a one product, rupees 1000. Wholesaler has purchased a product of rupees 1000 from a company, and let's say tax is 10%. So the total invoice will become 100,000 and 100 rupees. Total invoice. Actual price. This is the tax. So this wholesaler A has paid the tax to government. Who? To government. Now let's talk about the B. Let's say B has done some kind of value addition of rupees 200. So the actual cost of the product will become 1200. Actual cost of the product will become 1200. Let's say again the GST is 10% on this product. GST is 10% on this product. So it becomes 1200, tax becomes 120, and total amount has become 1320. Total amount of or total invoice is 1320. So actually this 100, let's say 120. So 20 rupees on this 20 rupees on this 200 rupees value addition. 20 rupees tax on this 200 rupees value addition and 100 rupees tax on this 1000 rupees. But actually government to whom this tax is paid? To whom this tax is paid? To government. Government already got this 100 rupees from this. Government here also got this 100 rupees. So this a wholesaler will ask government to repay his 100 because government already got the 100. Here is you. So you will be charged how much? 1320. It is the actual consumption price. So input tax credit means whenever the tax will be paid, the earlier trader, wholesaler or any other person who has already paid the tax will get the tax from the government. So this is the input tax credit system. I hope Harshita and others you are understanding the things. If still do not, please do let me know. Now, how government is doing all these things? How government is doing? Because government is not going somewhere that okay, government is going to the trader A, okay, take your input tax credit. No, all this thing is happening online. You have to enter your invoice in order to get the input tax credit. So where it is happening? It is actually happening here on the GSTN network. What is actually GSTN network? GSTN network is nothing but a not-for-profit company, under the Companies Act 2013. Not-for-profit company, or we can say it is a Section 8 company. So not-for-profit company, also known as Section 8 company, because these companies are not made for the profit, rather they are made for the other purposes, not for the profit. So who are the partner in this company? Union government is there, state government is there, and few non-governmental financial institutions such as SDFC banks. So now, earlier the structure was that, now government has planned to remove these financial institutions. But for us it is not important. The important is actually what is the GSTN network. GSTN network is a not-for-profit company or Section 8 company. Let's talk about internationally, in what happened internationally. So internationally, France was the first country to implement the GST in 1954. Since after that, almost 160 countries around the globe has implemented the GST. It also include here India when we have implemented the GST in 2017. Now, what are the advantages? Why GST is good? Okay, first of all, it covers both goods and services. Earlier service tax was only levied by the central government, not by the state government, but here state are also getting fruit of the service tax. It reduces the interface between the tax officials and assessors. How? Remember GSTN network. What GSTN network is doing? GSTN network is an online portal where you enter your GST invoice. Nobody will harass you, nobody will come to you until or unless there is a mismatch. Now, currently, the matching of the invoices is not happening over the GSTN. There are the issues which are hampering the mismatching of invoices and introducing this mismatching of invoices, and that's why this becomes a challenge here in the GST tax structure in India. GST provides input tax credit to the suppliers. Yes, we have already seen. GST input tax credit system, how it is helping? basically it decreasing the cascading effects of taxes. It has also reduced the cost of manufacturing and selling. It has also reduced the final consumption price. Now when final consumption price is reduced, so the propensity of the consumption of the consumer will increase, and further it will give the boost to the economy. It is creating a unified common market across India. For example, let's say 5% tax structure is there on the biscuit. You go to the Tamil Nadu, 5% tax you have to pay. You go to the Kashmir, you have to pay the 5%. Is streamlining the tax system. Whatever I have said, that now excise, VAT, other taxes are also subsumed under the GST. It discourages the tax evasion. For example, let's say that trader, which is me, let's say I am not properly following the invoices. I am basically evading the tax. So what will happen? When I will evade the tax, I will not enter my invoices at the GST portal. So that trader A, this trader A will not get that input tax credit. So it means this A is watching me so that I should enter my invoice at the GST portal in order to ensure the tax compliance, in order to avoid the tax evasion. Now, it reduces corruption, yes, no doubt. It boosts secondary sector. Secondary sector means manufacturing sector. So manufacturing sector, yes, because now excise and other things are being subsumed under the GST. Simpler tax regime with fewer exemption increases the propensity to consume. It increases the final price paid by the consumer. It further boosts the demand in the economy. It increases the ease of doing business. Earlier there was much more number of the taxes. It increases the compliance burden. It also increases the inspector Raj which was there before the 1991. Reduction in the multiplicity of the taxes. It also eliminates the double taxation on certain sector, or I can say it decreases the cascading effect of taxes. So this is all about the advantages. Let's look into the zero rated export. Zero rated export means because it is destination based tax, so destination is in the other country, so you have to zero rated export. So whenever you have to export something, you no need to pay the GST. Rather, there are some other taxes you have to pay, but no need to pay the GST. So zero rated export. Let's talk about the challenges. What are the challenges in the GST? So first of all, compliance portal of the GST is an issue. There are the technical glitches which are still not fine. So it is it is creating a hurdle for the traders, and because of that compliance issue becomes more prominent. GSTN is still in the process of automating the returns and has not been able to achieve the ability to match invoices from the credit perspective. So whatever I was saying, there is actually mismatch in the invoices. Because of this, the compliance of the tax is increasing. Many interpretation of the GST laws by the official is also creating the litigation, and because of this litigation, the tax money is under the deadlock. Tax money is under the deadlock means government is not getting enough money, and because of this, some way or the other, it is also hampering our development. Refund are taking the time under the GST regime. This becomes an issue. For example, I am a simple trader. I don't know much, and I don't have enough money to trade. but let's say my money is being there with the government officials or government, they are not giving me or they are not giving me back my input tax credit, so this becomes an issue. Fine. So there are multiple rate structure. So when this GST was introduced, people did not know, let's say egg, there are two types of egg, one is raw egg, one is boiled egg. So boiled egg will come under the 5% or 10%, it was not sure, and this raw egg will come under the which either 0% or 5%, it was not sure. So multiple rates are also hampering the GST, the spread of the GST or this GST compliance. Now what about the next? If I talk about the identification of the goods and services with the HSN code to arrive at the correct tax rate to apply, this is also becoming an issue because we are following now an HSN code. Now though it becomes helpful for the GST council to understand the tax and which type of the good and the services will be put under which type of the structure, but it is becoming hurdle for the traders. Again, it is a short term hurdle but a long term fruit. It has reduced the fiscal autonomy of the state because earlier there were multiple taxes. Let's say excise. Excise is a production based tax wherever the production will take place. Wherever the production will take place, there will be the tax. So, for example, Gujarat is a good manufacturing state. So here manufacturing capacity is good. When manufacturing capacity is good, so Gujarat was getting much more tax collection. But here much more population in the UP. UP consumed too much. So now GST tax collection is increased in the UP but decreased there in the Gujarat. So ultimately Gujarat was having enough money, earlier UP has not, but now because of the consumption UP is having enough money. So because of this it is decreasing the fiscal autonomy of the state. Levy of the additional cesses. What is this additional cesses? Now if you know about the diesel tax structure or the petrol tax structure, then particularly you will be getting to know that yes, it is an issue. How? Because excise on the petrol is not, or the diesel is not under the GST. So it is levied by the state, or it is levied by the center. It is levied by the center. Now whatever tax will be collected by this center on the excise will come under net proceeds of taxes. Net proceeds of taxes. So whatever collection will be there with the tax of excise will be given, or out of this 41% will be given to the state. But here center government has played basically a creepy role. How? They did not increase the excise, but rather they increased the duty. They increased the duty over the excise. When they increased the duty over the excise level became almost same, but tax on the duty has increased. Now tax on the duties or tax collection by the duties was solely prerogative of center. It will be not given to any of the state. It will not be given any of the state. So here center played a role. Levy of the additional cesses. Now additional cesses will be totally goes to the center, not to the state. That's why state was crying. Even petrol was sold more than 100 rupees per liter. And despite of that, state was not getting enough money because center was holding the money. The capacity of the state tax authorities so far used to taxing the goods, not serving to deal with the latter in the unknown quantity. This is an issue. Now some issues which are highlighted by the 15th Finance Commission: multiplicity of the tax rate, shortfall in the GST collection vis-a-vis the forecast. Forecast is too much but collection is less. Because collection is less, now tax authorities is complied to extract this much of the tax. Again it becomes the issue of the tax terrorism. High volatility in the GST tax collection, inconsistency in filing of the returns, dependence of the states on the compensation from the center, because IGST will be collected by the center and then it will be given to the state. When it will be given to the state, it is also prerogative of the center कि कब देना, when they want to give. Fine. So this becomes an issue. So what is the way forward? 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 First, decrease the tax slab, decrease the GST slab, either 2 or 3, not 4. Decrease the number of the GST slab. Next, include the crude oil, petrol and diesel and alcohol into the GST regime. Next, a political consensus over the issue of GST. Now remove the technical glitches which are there in the GSTN portal. Remove the technical glitches. Decrease the compliance burden over the small traders. Whenever small traders are facing the issues, please decrease their compliance burden so that our manufacturing sector should revive and further it will create the job as well as demand in the economy. So this is all about the way forward. These are the two questions which was asked. One was asked in the UPSC 2018, one is asked in 2017. Please do solve these questions because I am already running out of the time. So I will be giving you this PPT in our Telegram channel. Please do let me know how do you find these lectures. So let me go across that what we have learned so far. Let me quickly revise that what did we get out of this class. Tax type Y, we have already covered the GST, timeline of the GST, what is happening in the other countries, advantages, challenges, solutions, and there are the two questions which was already asked there in the UPSC. So this is all. So this is all from my side. Thank you very much for your cooperation and understanding. Please do let me know how do you find the lecture in your comment. I will be happy to know even your critical comment. So thank you very much. Goodbye. Tata. Take care.